Live. Let's do this. Speaker view. Make sure everything is right on here. How are you doing today, John?
I'm doing great, Patricia. Thanks for asking. Staying safe. Let's see. I wore a mask when I went to the HEB this weekend to get provisions. So, I think just adapting to the new realities that we all face today.
Yep, things are changing. We're adapting and adopting new practices, but it is for now the new normal. I think we're going to see a lot of things change permanently, even once all of this settles down and we get back to normal. I think it's going to be a new normal with the way a lot of things are done.
I totally agree with that, Patricia. One of my favorite quotes is from Charles Darwin. And it's that it's not the smartest, the strongest, nor the most intelligent of the species that survives, but it's that's most able to adapt.
Yep.
And,
exactly.
I think that's just what we real estate or housing finance professionals, have to do is, adapt.
Yeah, it's fun, right? You don't really have a choice. There's, you either adapt. The world's going to change around you right now, whether you decide to go with it or not. So where you end up at the end of all this and after all this is going to be a direct reflection of how quickly you are able to adapt and change. So
that's so true. I'm a motivational guy, right? So, it's like, you got to ask yourself, did you go through this or did you grow through this?
Right.
Yep,
I love that.
There's
I love that.
Today.
Well, let's just jump right into it.
Okay. Yep.
Glad everyone joined us or is joining us live right now for our weekly market and mortgage update. I'm Patricia Zars with ZNR Realty, and I've got the fabulous John Hudson with Mortgage Financial Services on here again with me today. Every Tuesday right now at 2 p.m. Central, you'll find us here, and we're going to fill you in on all kinds of different stuff happening with the market, the real estate industry in general, as well as the mortgage industry and what we've got going on in this crazy world around us right now. So, John, why don't you start right now? I know there's we see a lot of different questions, frequently asked questions right now on different topics floating around. And to be honest, I see a lot of information going around that's not all that accurate. And that's one reason why we wanted to start doing this is just to be a resource and provide some accurate information for what's going on and what people can expect, with regards to rates and programs and, the buying and selling process and all of that. So where are we right now and what are you seeing as far as over the past week or so with what's going on with rates?
What rates? Okay, that's a great place to start. And again, Patricia, thanks for having me. I mean, this is a lot of fun. I enjoy doing it, and more importantly, I just can't stress enough how important it is for anybody to work with a local, professional and hear it one-on-one. Don't believe everything you read on social media. That should be rule number one. Pick up the phone, do a Zoom, do a FaceTime, do something, but actually get the real story from a local licensed, mortgage professional, if you're in the real estate world or consumer world and looking to get information on what's happening. So mortgage rates, great question. Mortgage rates, fortunately, in the last week have been stable. And what I mean by that is, a couple weeks prior, I think I was talking last week. I remember I was talking about how rates are going up, they were going down, they were going up, they were going down, and we were bouncing all over the place. And fortunately for the last week, I think that's kind of settled down. The volatility in the secondary market, which has slowed down to where, okay, rates are hovering right now in a range still anywhere from 3 to 4%. And I'll just throw that one out there. But you're not seeing the wild swings and the multiple price changes on a day-to-day basis. Before, a couple weeks ago, you needed to, if you got the quote you liked on the phone, you needed to lock it in right then and there because it was going to disappear in 2 minutes. So fortunately, they're stable right now. They're still extremely low. And I think, part of what, that kind of segues into the next thing that I want to talk about is, and I know that you and I we're talking about it, is how products are changing and costs are possibly increasing for consumers. So while the note rate that a consumer gets is going to be low, I mean, let's just be honest. Anywhere, if you're getting a rate anywhere under 3.75. I mean, that's extremely cheap money to be financed over 30 years, right? However, what's happening, and I think this is just part of the new norm right now, is that the cost to get those loans are definitely increasing. And so what's happening that a real estate person or a consumer may not understand is the use of margin that we do in the secondary and mortgages used to help fund operations and provide great rates and service to our clients. So, and with that margin, the higher the risk class of a loan, the more risk, the more cost there is to a consumer. And so what we're seeing right now is that lower credit score borrowers are requiring more cost to get such low rates. And it's no fault of their own. I mean, it's what's being perceived out there. Probably driven by a lot of the mixed messaging we're getting from the government right now, is that the risk associated with loans, and therefore there's going to be more cost associated with it. So no margin equals higher cost upfront. And where that translate to on the real estate side is that home buyers are going to be needing or asking for more seller concessions to offset closing costs. So if I was a listing agent or a buyer's agent today, I would definitely be prepping the seller for that. So if we agreed that, hey, we're going to list this house for $250,000, then let's keep it in the back of their mind that we might accept an offer for $255,000 and be willing to pay $5,000 towards closing costs, because that's going to help the buyer, be able to essentially acquire that property, and then we have a transaction that closes and everybody's happy at the end of the day. So
True.
I hope that kind of makes sense a little bit. I mean,
it does.
Rates are low, costs have gone up,
and that's what I wanted to jump back to on the rates. You said they've kind of steadied a little bit. And what's really nice is they've steadied at a pretty low rate, so we're seeing them still under 4 right now, changing obviously a little bit here and there, but under 4, we're still at very, very low rates, which even though getting into a loan, there could be those additional costs, like you said, if someone, has any challenges when it comes to their credit profile or things like that. But at the same time, if someone is in the market to buy right now, if they need to buy, I think we can't stress enough that they don't need to be scared of the market right now. It is still a very, good scenario to get into a loan and into a mortgage right now.
Absolutely. No, and of course, I think I've said this before, my 22 years doing this, no borrower is exactly the same, which is again why, I stress the importance of working with a local mortgage professional, somebody that can truly be an advisor that's going to look at your whole situation and figure out the best course of action for each consumer. But it's kind of funny. Yeah. So one thing I'll notice on rates, or note on rates again, because I do get this question quite often, is shouldn't rates be lower? I mean, look at the 10-year treasury. And the short answer is yes, mortgage rates should be lower. The spread between the 10-year treasury index and what 30-year mortgage rates are out there on the street right now, they average, I'd say, historically, they would average, roughly, let's say call it a 70 to 80 basis point spread. Well, right now we're hovering around 250 to 300 basis point spread. So they should be lower, but you got several different things playing in there, and really, what are mortgage-backed securities? They're instruments that investors buy to offset risk. And so when you have uncertainty in the mortgage or housing market, it devalues what the worth is of these assets, these mortgage-backed securities, and so you get these greater disparities. I think if we finally get some direction and some consistent messaging from our government experts, then I think then we might be able to we'll see the risk lower a little bit. But right now there's so much uncertainty out there. So you've got a couple things working. If a bunch of people go out there into forbearance, well, no one is really going to know what that's going to look like. And then, oh my gosh, so if I give you a loan today at 3.5%, but then tomorrow the rates drop to 2%, well, you're going to refinance that. And, now this asset that I just paid a premium for just disappeared. So you've got a lot of strange things working right now, and effectively the system is still broke, although we're beginning to see some stabilization. Very little, but a little bit is better than none.
Well, and I think through all this, everyone's going to have to understand that this is, not something that's just going to quickly come and quickly go away. There's going to be lasting effects. There's going to be residual cascading effects from a lot of the different things going on. And that's why it's so important to, stay up to date on the different things that are going on if you're looking to buy or sell or even refinance or anything like that. But you mentioned, as you were just talking about, the forbearance, and I know that's been one thing that we've seen a lot of different things about. And the federal mortgage forbearance program and what's out there for people to potentially not have to pay mortgage payments right now. And I think there's a lot of misunderstanding or misguidance, or even just not knowing what's going on with that and how that's going to affect their loan, their credit, and everything moving forward. And to make sure they still understand they still do owe the money. It's going to come due at some point, and that they really need to evaluate and speak with someone that understands it, to know if it's the right thing they should do, because just because it's available, it may not be the right thing for them in their situation. So what are your, what's your take right now on what's going on with forbearance?
Lots of things scrambling through my head right now with regards to forbearance. The probably the most important message that we should put out there, though, and make sure people understand that forbearance does not equal forgiveness. That money is still owed no matter what. And despite the messaging that's come out of DC, and gosh, they really messed up when they wrote this, within their messaging, because at one point you have the Treasury Secretary Steve Mnuchin come out and say that this forbearance program is only for people of need, people that are truly experiencing hardships due to the COVID-19 disaster that we're dealing with. So that would be, people that were furloughed, people that lost their jobs. But then you have politicians and other regulators coming out and saying, oh, well, if you ask for forbearance, we're kind of using the honor system, so no one's really going to no one's allowed to ask you if you're truly being impacted by the COVID-19 disaster. And so you've created this moral hazard that, and anecdotally, I can tell you that we've already had cases of consumers asking us that are gainfully employed, aren't in any danger of losing their jobs, that just say, well, I don't want to make a mortgage payment. And so we're having to explain to them, what does forbearance mean? And in both cases, they go, oh, well, never mind. I thought it just meant I could just skip 2 months. Well, it doesn't really, it's not that easy. And so again, forbearance doesn't mean forgiveness. And so a great example that I could tell you would be, let's say Alice, first timer, is a homeowner out there, and her mortgage payment is $1,000 a month. Well, so her payment was due on April 1st, but she said, hey, I want to get this forbearance thing. So she calls the loan servicer, who she gets her statements from every month, and calls a little 800 number on there and says, hey, I'd like to apply for this forbearance thing. Well, the servicer really can't ask for any documentation or evidence to show that they've been impacted by the COVID-19 disaster. So they grant the forbearance because that's how the law was written. So now Alice is able to skip April. So there's $1,000. She's going to skip May, because we're going to assume, say, a 90-day forbearance was granted. Now we're going to skip June. So there's 3 payments. But then the July 1st payment is due. Well, Alice has a couple of options. She could either pay all 4 payments, so $4,000 at one time, or effectively what's going to happen now is Alice is going to have to enter into an actual loan modification if she can't come up with the money. and a loan modification. While the CARES Act says that a servicer cannot ding a consumer's credit for the forbearance, it doesn't say anything about a loan modification. And I've been doing this long enough to where when we see people applying for a mortgage that have had a loan modification in the past, it definitely shows up on their credit report. And there's, if they're seeking to buy a new house or refinance in the future, it can absolutely have an impact on their ability to do so. So, again, I can't stress it enough. If you have been impacted by the COVID-19 disaster, and then by all means, absolutely apply for it, because you've got to do what you can to take care of you and your family. But if you're just looking to skip a payment or two, because who doesn't not like skipping payments? Well, then please rethink that strategy. And there may be other ways to do that too. Let's say you're unsure of what's going to happen. Well, maybe see about if a refinance might make sense for you, because depending on how your refinance is structured, you could potentially skip a couple, not have to make a couple of months payments, like writing checks out of your back pocket. So maybe a refinance might be a great option. So all I'm saying is, again, forbearance is not forgiveness. And on top of that, if let's say you do need the forbearance, to be helpful. I've got a couple statistics here that I jotted down because we got some great data that came out of the Mortgage Bankers Association today. So think about this. There's roughly 12 or 13 trillion dollars worth of home loans that are out there throughout the United States right now. And as of March 2nd, the number of loans that were in forbearance was 0.25 of 1%. So 0.25%. Well, by March 30th, that number was now 2.66%. The greatest jump, and this is interesting, between Ginnie Mae, which was at 0.19%, jumped to 4.25%. So what does a Ginnie Mae loan mean? Ginnie Mae is the government servicer or master, servicer basically, or insurer of government-backed loans, your FHA, VA, USDA loans. These are kind of interesting, and we'll continue to see them go up. Between March 2nd and March 16th, the number of forbearance requests jumped by 1,270%. Between March 16th and March 30th, that number jumped another 1,896%. So what's happening now is you've got, again, because of the mixed messaging coming from our government, these servicers are getting inundated with phone calls that they can't even keep up with.
Right.
So now what's going to happen? So think about this. What also happened, in the last 30 days for that servicer? That servicer had to find a way to have all of their call center employees now set up to be working from home. So you get this perfect storm that's happening. Massive amount, people now aren't working in their office, they're working at home. Now you're getting a giant increase in the number of people asking for this forbearance programs. And now you have the servicer themselves trying to figure out how are they possibly going to process all these, and then on top of that, still be able to pay money out. So one thing that I think a lot of people don't realize is, for example, with Ginnie Mae loans, the servicer, whoever is servicing the loan for Ginnie Mae, regardless of whether that borrower is making their payment in or not, the servicer still has to guarantee making payments out to the bondholders for these loans that are insured by the federal government. So if no money's coming in and the servicer keeps having to dish out money, what do you think is going to ultimately happen? I mean, you've got a pending, looming disaster on your hands.
Right.
So,
Right.
Even over the weekend, the Mortgage Bankers Association issued a joint statement and request, really, for help, but it was a joint statement with the National Association of Realtors, the National Association of Home Builders, gosh, the apartment association even came in on this, because not helping to create credit facilities for these servicers during this time is going to ultimately impact, have a much broader impact on the overall housing industry. And so there's a lots of stakeholders, and there's no 30-second sexy soundbite about how servicing works or how forbearance works, other than forbearance is not forgiveness. If you have the ability to make your payments, you really should. And if you don't, then that's why these programs are there, to help the people that really need them the most.
Right.
So, and that might be another thing to think about. If you're just wanting to skip a payment, well, you might be clogging up the system for somebody that lost their job and really needs to find a way to be able to put food on the table right now for their family.
Right.
So
Yeah, I know we're seeing the system backed up a lot with the combination of things with forbearance requests and refinances and new mortgages and everything. All of that goes in together, and it's important that kind of collectively as a whole we go, okay, what do I do? What do I need? Where do I need to be in place in this line? You know what I mean? And make sure that we're making sure that the people that really do need the help and need the assistance have the ability to get to it, in a timely fashion, if you will.
Yeah, absolutely. And for our real estate professionals out there too, remember to encourage that to consumers. I've seen anecdotal stories already of social media posts saying, hey, you could buy a house and skip, 6 payments.
I saw one that said 12. I was,
that's just, ultimately that's irresponsible and really portrays our industry poorly in the grand scheme of things. And it's because of that, and that's why everything rolls downhill, right? So it's because of stuff like that we're also seeing credit tightening for other consumers. And what I mean by credit tightening, you and I were talking before, credit scores or minimum requirements are increasing, that debt to income ratios are being looked at a little bit tighter now, that number of months reserves might have to come into play with qualifying a consumer for a loan right now. So by all means, if you can qualify for a mortgage, you're going to qualify. But again, if you're in that lower credit score range, then it might be a little bit more difficult. It might be a longer process to get somebody into a mortgage loan, and just be ready for that.
Well, I think it kind of comes down to what we were talking to before on whether or not it's the right time for someone to buy, or and it kind of goes down to that age-old question that people in real estate in the whole industry get, and they're like, hey, how's the market? Well, the market depends on what you're looking to do and what your situation is. So everyone's in a different realm of this whole situation. It is affecting everyone, but it's affecting everyone differently. And while it may not be the right time for some people to buy or for some people to sell, there are still people out there that this is the right time, or they need to make a move. And they don't need to be scared of what's going on out there. They just need to make sure that they're working with people who are trustworthy, have good information, and are providing them with accurate information, and that constant communication for keeping them in the loop with how everything is changing and how it actually will affect their situation, not just a blanket terminology or blanket description of what's going on, because it doesn't affect everyone the same.
Right. No, absolutely. So, and again, that's why I stress using a local mortgage professional. Again, somebody that's licensed and in your community, has a vested interest in the well-being of your community. Somebody that's going to take the time to actually, again, look at a borrower's whole picture and figure out the best course of action for that family. But yeah, no, I still think that there is pent up demand that's out there. People that were wanting to buy a house 3 months ago, they're still going to want to buy a house. Once we get on the other side of this mess, bless their hearts. But if there are folks that are in shelter in place in an apartment complex right now. The next time the next shelter in place order comes up, would you rather be in your 600 square foot apartment or, shelter in place with a pool in your backyard? So there's, there's absolutely, there's going to be a demand. And, it's actually kind of interesting. I saw this the other day, even on like the Google search for rural properties was up like 500%. So, people are going to want to move and get some space out there. Yes.
Now more than ever. Yes.
Right. So there's, we're still going to have as long as, we can get over the other side of this hump sooner than later, that the government takes the right actions in helping servicers get through this forbearance issue that they created, that the government created. We're still going to have a healthy and robust housing market. Now, the longer this goes on, if we're not able to, turn the corner, and fix this forbearance issue, then we might be looking at a housing, crisis. Now, I don't see property values dropping like they did, in 2008, 2009, 2010, because that was a different crisis. That was, we really had a bubble and credit was too loose. Prior to COVID-19, mortgage delinquencies were at a historical low. So people were in their mortgage, the economy was great, people were able to make their mortgage payments. And so, it's not something that I see in my experience or crystal ball that will bring real estate values down.
Well, I think people need to understand this, that this isn't a housing crisis that we're in. I think people generous, they jump right into thinking when we go into something like this and when there is economic strife because of this and the talk of recession and things like that housing crisis pops right into their head. And we're not in a housing crisis. Right. And housing very well may be one of the things that pulls us out of this the most, as far as the economics of it. And when Lane and I were taking a look at all of the different market stats this morning, which we're doing very regularly now to see what's going on with, overall closings and pending sales and new contracts and listings and all that kind of stuff. I mean, we're still seeing a very, very good market here in San Antonio. I mean, in the past 7 days, according to the San Antonio MLS, there was almost 800 new listings, 786 new listings in the last 7 days. And, that's with, I think about 8,300 listings on the market right now. That many were new just in the past week. Wow. And I think we're going to see some people, out of fear, some of it will be fear, some of it will be legitimate reasons for needing to take a house off the market or not close on a property. But I think a good majority of it's just fear and the unknown of what's going on, or the feeling and of the worst case scenario. But with all the new listings that are hitting the market, we've got a lower amount of inventory right now than we typically would have going into this part of spring. We do. But there are still a lot of buyers out there. I mean, and I'm looking at some of these numbers. I mean, in the last 7 days, 222 new contracts, 587 closings here just within the San Antonio Board of Realtors. And, we've only had over the past entire month, 401 properties that were taken from active to withdrawn. Yep. And about 500, just over 500 that were actually canceled. And in any market, we see withdrawn properties, we see cancellations, for various reasons. But if you look at the numbers, and everything is still running at about 90%, of typical volume of what we were seeing within just the last couple of weeks. So I just really think that agents and, buyers and sellers and everyone out there who's looking at the market needs to understand that the market's going to do two things. It's going to be driven on fear, on how people, react to what they see in the news and, their unknown of what's going on. And then they're going to react to specific situations that are in their lives. So how we as an industry portray what's going on in the market, I think is very important. to not instill fear that's not warranted, but then also to come at this from a position of a trusted resource.
Right.
If it's not the right time for you to buy or sell and you don't want to right now, that's okay. And you can be put on a path, to get you in the right position to buy or sell when the time is right for you, and you don't have to be fear driven when it comes to this.
It's actually kind of interesting. We really have not seen a slowdown in the number of people that are applying for mortgages,
Right.
and I think that because of that, a lot of people are kind of taking more of that path now. That what, whenever we get through this, I want to move. I want to buy a new house, and so we're getting more people that are coming in with longer term expectations, which I think is smart. Develop a roadmap, create a path to home ownership, find out, okay, have that professional, determine, okay, what is going to be the best course of action for you to get from point A to point B, so that way you're prepared once you get to that other side. So yeah, I mean, we're not really seeing anything slow down right now, despite everything else that's going on. If anything, the home buying process, it just looks a little bit different and takes a little bit longer these days because there's so many stakeholders in getting one transaction done.
Absolutely. Yeah. So it's an interesting time to be in for everyone. It's a new thing every single day in this industry, seeing what's happening and where the market is and where people's behaviors are taking them through this process.
Yep.
And we're safety is our number one priority at this point, when it comes to our agents and ourselves and our clients and our community. But there's still a lot happening in the real estate industry, and there's so many different ways that buyers and sellers can accomplish what they want to with their real estate goals, whether it's buying or selling or both, or getting on a path to purchase, or getting their home ready to sell when the time is right for them. And there's so much of that we can do from our homes, from platforms like Zoom that we're on right now, and virtually is a broad sense, that broad virtual term we use. There's just so many different things we can do that are efficient through with this process, that are not, that allow us to stay socially distant and still allow us to get the face-to-face, still allow us to get the information and the right content out and between each other, and have that communication and get through a process seamlessly from start to finish. That I don't think we're going to see as big of a slowdown as a lot of people think we might in our industry. And I think it's just how we approach it and continue to move forward, that even if things slow down temporarily, there's going to be so much pent up demand that coming out of this is going to be it's going to be wild.
Absolutely. So again, I'll just close with this. Faith does not mean it's going to be easy. It's just there to get you through it. So we will do fine.
Gotta have faith. Yep. Well, I appreciate you jumping on with me again.
Yes, this is fun.
Great information as always. I have seen a few questions going back and forth in the comments on Facebook, but it looks like some of your team over there at Mortgage Financial Services is on it, answering questions. Cool. Yes, Jamie Lynn is answering those questions live as we go. If y'all have any other questions, you can post them in the comments on this video. You can always reach out to John directly. John, your number again. I know we do this every week.
Yes, 817-247-4766. And text me, email me, call me. I will give you the hot sports opinion and the truth, and only the truth.
Awesome. And if you guys have any questions real estate related, you can call or text us at 210-834-7054. We can connect you with a very knowledgeable, experienced agent on our team. And we look forward to seeing you guys next week. And we hope everyone stays safe and has a great week.
Awesome. Thanks, Patricia. Bye, guys.
Bye.